Hi, I'm Shane Lipson from Mount Franklin Insurance. So we've certainly seen over the past several years in particular an increase in weather-related havoc, whether it be hurricanes or higher temperatures or floods that are causing damage to property, primarily that people own. And so we're seeing an increase in claims, we're seeing an increase in construction costs, and we're seeing a tightening of supply to enter the construction industry because there is so much work going on and it's raising the prices. Yeah, so I think a lot of people think about insurance in terms of their own personal microenvironments, right? So they're thinking about insurance in terms of their personal home or their personal auto, and they'll often think about claims that they might or might not have filed over the last 5, 10 years or something to that effect, and think about the way the insurance rates affect them individually or how it should or shouldn't affect them individually. And I think what a lot of people don't realize or sometimes miss is that insurance is a globalized market. And so much like the stock market, where one sector of an economy can affect other sectors of an economy, one geography can affect other geographies in the insurance market. And so while you yourself may or may not have certain claims or been directly affected by the weather or by climate change, the fact that there is less capacity in the marketplace all around is driving the rates up, even for those that aren't directly affected by it. Right? I'm not sure that everyone recognizes when an insurance company sells you an insurance policy, typically that insurance company is insuring a wide variety of people across a large geography, and even if they're not, most of them are buying reinsurance or entering the reinsurance market where they actually take packages of policies or pieces of policies and sell it into the global financial market. And so if you have a hurricane in Houston as an example, or a hurricane in Florida, even if you live in Iowa, you're going to have some kind of effect from that because the hurricanes that are happening or the flooding that's happening or the heat-related damage that's happening is affecting that upstream financial market. And remember that insurance, the entire concept of it is that you're paying a small amount of money, a premium, into a pool. And with that pool, the insurance carriers are then paying out claims. And so if claims happen somewhere else, even though they're happening somewhere else, it's going to affect everyone. Because the challenges of the insurance market right now are pervading throughout the United States, regardless of whether you live in West Texas or you live in flood-prone areas like Houston, my recommendation to them are include a couple of things. The first is, as much as possible, try and work with one particular carrier. You don't want to be jumping around as much as you would be in a market where lots of carriers are vying for your coverage and vying for your policy, because jumping around now decreases the interest of carriers in writing you because they think they're going to have you for a year or 2 years, and that makes it more difficult to price it competitively. The second thing is it's time to start looking at things like deductibles and other coverage elements. I tell many of my customers that if you're not going to file a claim for a $600 piece of damage, which in general I tend to recommend people don't do that, then you shouldn't have a $500 deductible because you're not going to file a claim that the $500 deductible becomes worthwhile. So look at raising your deductible $1,000, $2,000, 1% of your home value, 2% of your home value, and treat insurance as a stop loss. Treat insurance as a backstop that keeps something from catastrophically happening, recognizing that you're going to be paying out of pocket a little bit of money for smaller kinds of damages. The third thing is I recommend that people look at working with independent agents. The value of an independent agent is they typically have contracts with multiple different carriers out there. So when one carrier exits a market or tightens restrictions in a market, they're the ones that will be best poised to know what carriers are entering markets and have more liberal policies where they're trying to enter markets. And those independent agents typically have the insurance knowledge and the market knowledge to be able to match you with the right carrier of your choice. So those would be the three things I'd recommend.